Thank you for joining me today. In today's video, I'm going to access the recent stock market. This begs the question, are we in a stock market bubble? If you need a lasting answer to this question, I've got the answer to it. Stay with me till the end of the video to know more about this topic. Now, let's get to it. Everything said in this video is for entertainment purposes only and is just us acting as your source of interesting information. We recommend that anyone considering investing their finances conduct active research before putting their money on the line. Stock market bubble. What is it? A stock market bubble occurs when stock prices rise considerably without corresponding rises in the underlying company's valuations. The value of a firm is defined by its business fundamentals, such as earnings, ability to grow even in downturns, and other key business criteria. When the investors talk about a stock market bubble, they're referring to inflated stock prices that aren't justified by the company's business fundamentals. The late 1990s dot-com boom is perhaps the most well-known example of a stock market bubble. High prospects for a new digital economy drove a boom in tech stocks. When those expectations were not met, nearly all of the tech stocks that had risen in value during the boom years plummeted, and the underlying companies went bankrupt. When a stock market bubble collapses, what happens? All stock market bubbles eventually burst, resulting in a significant drop in stock values. While any variety of reasons can cause a market bubble to burst, most crashes occur when a major source of credit becomes unavailable. Is the economy currently in a bubble? It's difficult to tell if we're in a stock market bubble in real time. There's currently no sign of a stock market bubble when looking at the S&P 500 as a whole. The S&P 500, a broad market index, has rebounded quickly since last March's crisis, although it was still only about 15% over its pre-pandemic high of 3,386.15 at its peak in late January 2021. With investors expecting a tsunami of pent-up consumer demand to propel the economy once the pandemic is finally over, the modest 15% increase implies that much of the post-pandemic recovery is already priced in. While stock prices may be higher than present business fundamentals can support, a 15% increase is far less than the kind of price inflation seen in full-fledged bubbles. In comparison, the Nasdaq increased by about 400% from 1995 to 2000. Last year, the value of electric vehicles, or EV stocks, surged by more than 700%. The stock price of Tesla, Nasdaq TSLA, the industry leader, has increased by over 700%. If the EV business failed to deliver, the stock prices might plummet quickly. Small-cap companies in industries like renewable energy have also risen in value, placing them at risk of crashing. The greater fool theory assumes that another investor will always be willing to acquire a stock at a higher price. In recent months, the same phenomena appears to have occurred with Bitcoin and other cryptocurrencies, as their prices have risen as well. In the current market climate, there is no visible credit source fueling stock price gains, while there is evidence of a spike in retail stock trading. Government relief efforts such as pandemic stimulus payments, increased unemployment benefits, and other government relief measures may be helping to fuel a possible bubble. The Federal Reserve's decision to raise interest rates could lead to higher borrowing costs for consumers who have recently registered with Robinhood and other retail trading platforms. J.P. Morgan famously sold his stock holdings ahead of the Great Depression after a shoe shine boy asked him how he might acquire stocks. Many investors are exceptionally bullish right now based on the current investor attitude toward Twitter and others. This could indicate that the stock market is in a bubble. How to safeguard your investments during a stock market bubble? Investors may wish to take a more philosophical approach of stock purchases, only holding stocks with good business fundamentals is the simplest method to protect your portfolio's value. Buying shares in high-quality companies and holding them for the long term is the best and easiest option. Target and Facebook stand out in the current market. Traditional bubbles imply a rapid price rise, a large trade volume, and widespread word of mouth. If you hear about an investment opportunity through social media or from friends that promise extraordinarily high earnings, be skeptical. In most cases, you'll need incredible timing to come out on top. Thank you for watching this video. Make sure you subscribe and hit the bell button to get instant notifications when we add new videos in the future. Don't forget to like and share the video with others so that they can benefit from it. Thank you, and see you next time.